Oh yeah, this video will be the most comprehensive video on everything you need to know about commercial leases. Roll that intro. Welcome back everybody, so nice to see your smiling faces. If you're new here, welcome. My name is Alex Beltran and I talk about real estate tricks, tips, techniques, and topics. So if you're in the real estate business, aspiring to join the real estate business, or you just want some guidance and or references to everything that the real estate industry encompasses, go ahead and smash that subscribe button. Let's jump into it. So if you're looking to invest in commercial real estate or lease commercial space for your business and want to know the different types of structures and clauses that make up commercial real estate options, then this video, it's for you. Commercial real estate is very diverse. It covers everything from raw land to skyscrapers and everything in between. The varied nature of businesses that lease commercial real estate calls for varied and sometimes very complex lease options as well. I went on ahead and linked all the time codes in the description down below if you just want to skip ahead to a particular lease option. Just keep in mind that much like actual commercial real estate leases, a lot of this information is going to intertwine. So just so that we're all on the same page, I'm going to start off with the basics. What is a lease? A lease, or more correctly, a leasehold, is when someone owns the rights to use a property without owning the property. There are two common leaseholds: rentals and leases. Rentals are usually automatically renewed every 30 days. Leases, on the other hand, are usually not renewed and last longer than 30 days. Usually 1-year residential leases all the way through 100+ years commercial leases. The sky's really the limit. Leases often convey more ownership than a simple rental. I'll explain what I mean by more ownership later on in the video. Now in this particular video, I'm not going to bring up the debate. Which is better, buying real estate or leasing it? Oh no! But you must be asking yourself, why do people choose to enter into a lease agreement? That is a good question that I do intend to answer in this particular video. Now, obviously, there's a multitude of reasons why any given individual will choose to enter into a lease. But throughout my time in the real estate industry, I've noticed that it really boils down to two main reasons. The first reason is because they plan on upgrading within the near future and prefer to lease for the next 2 to 5 years before purchasing a facility that better accommodates their needs. And the second reason, the person wants to purchase a property, but economic or reasons outside of their control prevents them from doing so. Maybe they don't have the money to make the purchase, or they feel that investing their money into their business is more important at that moment, or there's nothing for sale in the area that they want to be. So now that we're all on the same page, let's get to the different types of lease options. Commercial businesses are one of the biggest leasers of property, which is why commercial real estate is so profitable and sought after. We've all heard those arguments. Your primary home is a liability, not an asset. Well, once you bring this up to business scale, owning your own building for your business can become a huge liability because the costs associated with maintaining the property are so high, and a thriving business can quickly outgrow a building. Let's say you lease an apartment in an apartment complex. You can't make your own modifications. You can't just decide one day that you're gonna tear down a wall because it gives it a more open layout. Or you can, but chances are you're not gonna get your deposit back, and you still have to pay for them to put that wall back up. And for this reason, commercial leases are structured very differently from residential leases. There are a few categories that commercial leases fall into, and they're not exclusive. So the same commercial lease can encompass several different categories. It is also very important to remember that commercial real estate does not have to follow fair housing laws. Unlike residential real estate, most rights and privileges conferred by the fair housing laws do not apply to commercial real estate. And this isn't to say that commercial real estate is bad and doesn't want fair housing oversight. In general, businesses hire experts to take a look at these contracts, be it a lawyer or a commercial real estate agent, and they tend to have the money and the knowledge to know if they're being treated fairly or not. Because of this fact, the government kind of looks away and has fewer governing regulations on how businesses write out their contracts. Because unlike residential leases, which is subject to statutes and regulations, most commercial leases are governed exclusively by the terms of the contract. This is the part where you get to look at the person across the table and say something along the lines of, "Let me run this through my attorney." You know, like a boss. Now, the most important part of a lease is determining how much it will cost. In a gross lease, which is the most basic form of a lease, the landlord pays all the costs associated with owning the property, and the tenant pays a base price each month. Due to the rising cost of ownership, gross leases benefit short-term leases, which is why gross leases are very common amongst residential leases. It isn't very common with commercial leases because commercial leases tend to be longer term. The next level up from this is a full service lease, in that the tenant pays a base fee and the owner covers the cost of ownership. The difference is that full service leases have a provision called expense stop. I know what you're thinking. Expense stop is going to be the most exciting part of this video. Now, cost of ownership normally consists of taxes, utilities, common area maintenance, and insurance. An expense stop provision is a provision that limits how much the landlord will pay for these expenses. For instance, if the landlord caps the expense stop provision at $10,000 a year, but the total for the year comes out to $13,000, that means that the tenant is responsible for the remaining $3,000. That exceeds the expense stop provision. This is why the expense stop provision could increase the tenant's rent. The expense stop's limit is usually determined by the base year. The base year is the arrangement where the landlord determines a set amount of the expense stop provision. And sometimes a landlord, rarely, wings it and chooses a number that is deemed reasonable. To simplify all this, think of it this way. You pay your rent and you pay all of your own utilities. Versus, you pay your rent and included in that rent is water, electricity, and Wi-Fi. But if you go over the water limit, let's just say the landlord gives you 100 gallons a month and you happen to go 101 gallons a month, you're responsible for paying that extra gallon. So that pretty much covers the basic leases and honestly, what everyone's kind of accustomed to. Now on to the more complicated leases. Net leases are the exact opposite of gross leases and, surprisingly, the most common form of commercial lease. Where in the gross lease, the owner absorbs all the expenses. In a net lease, the tenant absorbs all those costs. That is why these net leases are called net leases, because the rent that is received by the landlord is after expenses, compared to the gross lease, where the rent is the gross amount and the landlord has to deduct property expenses before arriving at the net profit. These nets are property taxes, property insurance, and maintenance. You must be asking yourself, why would anyone pay for the owner's expenses? Well, the benefits of that is a lower base rent price, and the tenant is given more rights to the property. Which brings me to what commercial real estate investors would consider the Rolls Royce of commercial real estate investing, the creme de la creme, if you will. You know, that succulent grade A5 Wagyu beef steak, the champagne-filled croissant. Triple net leases. Triple net leases are some of the hardest to find up for sale. Very, very few people want to sell a property that has a tenant that is paying a triple net lease. Not to mention, they're expensive. Because in a triple net lease, the tenant pays all the net costs. So as an owner, you basically just got yourself a money printing machine. Now, something that is very common with triple net leases is, for example, one building, multiple businesses. What the owner of the property in this case would typically do is pay out of pocket and then prorate the expenses based on square footage. Now, to close the chapter on net leases and gross leases, there are modified net and modified gross leases as well. This is basically when the tenant covers some of the nets, but not all of them, sometimes called a single net lease or a double net lease. Like I mentioned in the beginning of this video, there are a lot of moving parts when it comes to commercial real estate. It's hard to cover it all without completely veering off topic with examples. The next form of a commercial lease is a percentage lease. Now, just as a point of reference, in residential leases, most people feel relatively certain on how much money they make each month, which makes it easy for residential tenants to budget their rent expenses. On the other hand, some businesses have variable cash flows. They can vary from a few $100s to several $100,000 on any given month, which makes it harder for these types of businesses to budget their rent. One of the ways that landlords get around this is through a percentage lease, where the landlord charges a percentage of the profits of the business. What percentage the landlord may charge you varies wildly. It can consist of how big the business is, what type of business it is. There's multiple factors. Just keep in mind that the landlord still has to pay their investment. So the landlord will often set a rent minimum that the tenant must pay. Percentage leases have what is considered a breaking point where they will begin to pay the percentage. Normally, the lease goes to the neutral breaking point. A neutral breaking point is where the percentage of the income equals the base rent. For this reason, generally speaking, the businesses that benefit the most from a percentage lease are businesses with high profit margins. If your business has consistently low profits, then this percentage lease probably isn't for you. Adding a percentage lease allows the landlord to agree to a lower base rent, which benefits small startup businesses because the rent is low in the beginning. The landlord is banking on the possibility that the business profits will grow, and that's when the landlord will reap the rewards. Now, the caveat to this is that generally speaking, percentage leases require a longer term lease and have stricter penalties for early cancellation, because the landlord doesn't want to risk the business becoming very profitable, then canceling and moving into a fixed lease. So weigh out your pros and cons. The businesses that tend to take these types of lease options more often is the hospitality industry, like hotels and restaurants. Because, and if you work in that industry, you are very aware, there are busy seasons like the holidays or when more tourists are in town, and there are those slower seasons when it seems like no one's in town. You know, like Los Angeles during Coachella and Burning Man. Now onto raw land, ground lease. A ground lease has nothing to do with the amount of rent, so it falls into a different classification from the other types of leases. Normally, the landlord is responsible for any property improvements. If the tenant requires or desires certain changes to the property, then the tenant must negotiate that out with the landlord. For example, a restaurant needs to add a kitchen, or an office wants to change the interior to make it look more modern. Things like that. Now, ground lease is designed to work very differently. It allows more construction or development to happen, which is why a ground lease is done to undeveloped land or raw land. You know, ground lease. The landlord gives the tenant the right to build on the land and improve on it. At the end of the lease, the property is returned back to the landlord along with all of the development. A ground lease tends to be the longest term leases, as much as 50 plus years, but certainly no less than 10. And that's because the extended time gives the tenant the ability to profit from the improvements that they made to the property. Think of it like when CVS or Walgreens has to build their iconic corner lots, and they have to build them to those exact specifications. They make a ground lease along with a triple net lease, because it is in their best interest to pay all three nets. I told you all this information would intertwine. You just didn't believe me. On the other hand, have you seen those buildings that look like an old Wendy's? I mean, you know what I'm talking about, right? But now it's a completely different restaurant, but you know it was originally a Wendy's? Well, that's an example of a ground lease expiring and handing the improvements back to the landlord. Ground leases are without a doubt the most complex leases because there are no standard ground leases. Let's just say that this is where real estate attorneys really make their cheddar coming to an agreement. But there are some standard concerns that must be addressed. A major one is financing. Construction loans are one of the biggest concerns, because if a contractor is not paid, then the contractor has the right to put a lien on the property, which you can imagine how squirrely that would get, because the owner of the property is going to say, go after the tenant, and the tenant is going to say, go after the owner. So financing has to be clearly spelled out in events like this. This is really where attorneys have to hash out all the fine details. There are generally three major concerns. The first one, can the landlord mortgage the property? If the landlord mortgages the property and then defaults, then the tenant can be left with a huge loss because the land got foreclosed on. So it's not in the tenant's best interest to allow this to happen, but it is in the landlord's best interest to have the ability to mortgage the property, because that means he can pull money out of the property. The second concern is the exact opposite. Can the tenant borrow against the estate's interest? Because unlike residential leases, commercial leases can be used as a form of collateral for a loan. What happens if the tenant defaults? And the third major concern is what types of rights do the tenants have to that particular property? And that gets into a deep pool of legal jargon that is just too far above my pay grade. Oh, and you can't forget taxes. Since the land is being improved on, the land value will rise along with the tax assessed to the value of the land. It just opens up another can of worms if there's multiple tenants. Who will pay for that? Maybe they divide it up into separate parcels. I don't know. Needless to say, ground leases do not happen overnight. Once again, because of the complexity of these ground leases, this is pretty much an attorney's game. Now, some common lease clauses that you might come across are the premise clause, which lays out what property is being leased. Just as an example, multiple business, same building, company ABC's on the third floor, company XYZ's on the second. That clause specifies where those particular businesses sit. A use clause essentially spells out how the tenant can utilize the property. A sublease Can you or can't you sublease an office inside of the main tenant's lease? Then there's the exclusive clause, which prohibits other tenants from engaging in competing business activities. Let's say a medical office. You can't have two eye doctors in that same building. And then there's the option to purchase clause, which essentially gives the tenant the first right of refusal to purchase the property in the event that it goes up for sale. Generally speaking, commercial real estate is a very advanced form of real estate. A lot of people that get into commercial real estate have an entire team behind them. This isn't just one individual. If you have any questions or concerns, go ahead and drop them in the comment section down below. Now, I'm like 98% sure I covered all the major points about leases. If I missed anything important having to do with commercial leases, go on ahead and fill in the gaps in the comment section down below. And this actually brings me to the question of the day. I've noticed that commercial real estate has been pretty popular lately. Are you considering investing in commercial real estate? Why or why not? Go on ahead and comment in the comment section down below. And that's it for this particular video, folks. This has been the longest video I've made to date, so go on ahead and just give me a thumbs up for that reason. If you want to keep up to date with everything that I'm doing in real estate, go on ahead and give me a follow on Instagram. Subscribe if you haven't already. Check out some more of my videos. I will link them here and here. Other than that, catch you guys next week. Peace.